you everyone so much for joining us tonight. Um, this is a great session that we're really excited to have for you. My name is Avery Cox. I'm the Director of Business Development with First Service Residential here in Alberta. Our goal is to create an informative meeting experience on an important topic for board members. Through education and discussion, we firmly believe that our partnerships are stronger and our board members are more confident when they make decisions by being able to incorporate the advice of experts from various fields. Before we begin the session, I want to go over a few quick housekeeping items. Timing for tonight, we're going to try to be respectful of your time and keep this session to approximately 1 hour. We're hoping to have lots of time during our little breaks and at the end of the session to answer some of your questions live. Feel free to ask any questions throughout the session by typing into the Q&A box at the bottom of your screen. We will answer questions either during the session itself or at the end of the session. If we don't get to your question, then we will answer it in our takeaway document that will be sent out within about a week of the webinar being live, along with the recording of this webinar. So with that, I'm very excited to introduce to you our panelists this evening. I have Todd Harcherick, our Director of Risk Management and Compliance at First Service Residential, and David Cumming, an associate at McLeod Law, who's joined us tonight and is going to be answering some questions. Our agenda for tonight will be covering essentially our Risk 101, insurance basics, director and officers liability, and then we'll leave time for questions and discussion at the end. We'll also be doing some questions after each section. So if you have any questions during that specific topic on the slide, please put that in the Q&A and we'll likely get to that at the end or submit it with our takeaways. So with that, I will hand it over to you, Todd, and let you kick it off.
Wonderful. Thank you so much for the introduction, Avery. David, it's a pleasure to be joining you on this, and thank you to everybody who has joined us this evening. We, to Avery's point, we certainly respect everybody's time and respect the fact that everybody's joining us, right after work or whatever everybody may be coming from. So again, thank you very much for your participation and your interest. So, understanding that we have, quite a bit of information that we'd like to cover with everyone this evening within, as Avery indicated, about an hour or so, we'll certainly just go ahead and kind of dive in and get started. So what we kind of wanted to talk about this evening is, kind of risk management, or risk as a whole. Understanding, obviously, it's a very broad topic. So with respect to condominium corporations and, the board of directors, excuse me, just kind of starting with, sort of some fundamentals on, what is risk, and then kind of getting into, some specific strategies around risk management. So, that being said, what is risk here? We're just looking at kind of, again, like I said, just some very fundamental, definitions around what that is. So, it's any situation involving some kind of, exposure to danger or, the possibility of a loss occurring, the possibility of potential exposure to some type of a peril, or, someone or something that creates a potential hazard or suggests a potential hazard. So that being said, then, understanding what risk, encompasses, essentially from the perspective of a condominium corporation and the board of directors who are charged with leading the condominium corporation, the next question then is, well, how do we respond to risk? And that's really through the adoption of, the primary risk strategies. So if we go to the next slide. Oh, right. So a quick poll question. So if everybody could answer this question, do you have a risk management plan? So kind of an interesting result here. About 14% said yes, 32% said no, about 4% said working on one, and half indicated that they don't know. Um, so I think this is certainly a very appropriate topic to be covering, considering the interesting mix there that we saw in terms of responses. So kind of getting back to the idea of risk and how to manage risk, essentially there are four primary strategies around risk management. And we'll just kind of walk through those and sort of talk about each one in a little bit more detail. So the first one is simply acceptance, right? So you're accepting a situation as it is, and there's a willingness that comes along with that to deal with any potential consequence. The next one is avoidance. So it's quite the opposite of acceptance, where avoidance, you're going to, make the determination or the decision that you're going to completely eliminate that potential risk by just, completely removing it, or removing the condominium corporation from any type of situation that could in any way, touch that risk or be affected by that specific risk. The next two are probably going to be the most common risk strategies that a condominium corporation and the board of directors are going to employ with respect to the condominium corporation's risk management plan. The first one is mitigation. So certainly mitigation is merely reducing the probability of occurrence or trying to minimize the impact of any potential risk exposure within what the condominium corporation kind of deems to be acceptable limits. An example of mitigation, could be, wide ranging. It could be, a decision on which vendor or contractor to hire for a specific project. And just like anything else, the specific risk strategy that is going to be employed could certainly, hinge upon, any number of factors. From a mitigation perspective, certainly I think one of those factors would be the scope of a specific project that a condominium corporation could be looking to undertake. Something as simple as, painting an interior lobby, that more likely than not, in most cases, would be viewed as a relatively low risk project. So from a mitigation perspective, you might not necessarily need to take into consideration too many different factors. Whereas, by contrast, a major facade repair or facade overhaul of the building, obviously there's quite a bit of potential risk that would come with that. So there'd be a number of factors that the condominium corporation would want to take into consideration when taking or looking at bids from various contractors for that specific type of a project. So the fourth, most common risk strategy then is what we refer to as risk transfer. And this is where you're actually taking a risk and essentially, shifting that onto another party, or in many cases a third party. Two most common instances there are, yet again, anytime a contractor or third party vendor will be on site on the property to perform any type of work for the condominium corporation. You're certainly looking to that contractor to assume any and all liability that could potentially be involved in that project work that they're performing. So in doing so, a couple of different things. Number one, you would look to transfer the condominium corporation's risk onto that contractor or third party vendor from an insurance standpoint. Certainly, the way that the condominium corporation would go about doing that would be to require the vendor or contractor to include the condominium corporation as an additional insured on their general liability policy, as well as any potential excess or umbrella policies that contractor or third party vendor might have in place. essentially that, that they're in doing so, they're indemnifying the condominium corporation under their own insurance. Their carrier is agreeing to that, knowing full well that that vendor or contractor is in the business of providing, a certain type of service to third-party clients or customers. And in doing so, there are inherent risks to that type of work. Um, from a transfer perspective, kind of hand in hand with the additional insured status on the contractor's policies of insurance would be contract language that's very specific as well around the indemnification of the condominium corporation and the contractor including the condominium corporation as an additional insured and agreeing that that insurance would, would basically step in and provide coverage for any type of defense or indemnification, needs of the condominium corporation on a primary, what's referred to as a primary and non-contributory basis. So in other words, even though the condominium corporation has its own insurance, the agreement with that vendor would be that their insurance would step in, and essentially replace the insurance that the condominium corporation has in essence. Are there any questions at this point regarding sort of the primary concepts around risk or the foremost common risk strategies that are typically employed?
So I have a couple questions. First, I guess, Todd,
Sure.
the first one is for you, and then I have one for David.
Perfect.
So first question for you, Todd, is what insurance is a corporation obligated to carry? I know we get into that a little bit
Sure.
in the next section, but if you can give kind of an overview of that or just a high level answer, that would be great.
Sure. So, at the condominium corporation level, in Alberta, the Condominium Act doesn't necessarily specify specific coverages as much as it does specific types of perils that the condominium corporation could face. But typically, most perils that a condominium corporation could face are going to be included under the property coverage. So if there's, damage to the common elements of the condominium corporation, whether that be by way of storm, a water intrusion event, malfunctioning equipment such as like sprinklers that cause a flood within the building, things along those lines. That's most likely going to be covered under the property insurance. The other one then is, from a third party liability perspective. So property is what we consider a first party coverage, meaning that it's covering the named insured for, anything that named insured owns. The third party liability coverage then is what's referred to as the general liability policy or coverage. And the general liability policy or coverage is going to extend to potential situations where the condominium corporation might, be facing some potential liability to a third party, whether that be for bodily injury or, property damage or a combination of the two. With respect to condominium corporations, what we see, historically is, the far and away the most common type of third party liability situation, that's encountered is typically a slip and fall or a trip and fall claim where, somebody, a guest or just a member of the public, is on the property of the condominium corporation, maybe in the lobby, something along those lines. And maybe, perfect, case in point, we're, kind of in the middle of winter here. There's a lot of snow and ice. Somebody could, slip on, an icy patch, on the condominium corporation's property, and, pursue a claim for, for bodily injury that was sustained. Or somebody walking through the lobby and there's a rug and, part of the rug is, upturned or something along those lines where maybe they don't see it and they trip and fall and kind of, same type of situation where if they sustain some type of injury, then they could look to pursue a claim against the condominium corporation for that. There certainly are a lot of additional coverages available to the condominium corporation, and I think we'll definitely be getting into those in a few minutes here.
Awesome, thanks. Now, David, I know obviously you're in a different side of the business, in that you often see things once they've become a larger issue. So, based on some of the challenges you've seen in the Alberta market, what are some additional coverages that should be considered, or maybe what's some additional risk mitigation that we should consider?
I guess two things I'd highlight are, one, know what your deductibles are on major claims, especially water loss claims are by far the most common that you're likely to encounter. And have those in mind and communicate that to your owners so that they know that a deductible could be charged back in certain circumstances to them. And then if you have to pay deductible, you should have that in your mind to say, okay, if we're carrying a $50,000 or $75,000 or $100,000 deductible on this loss, we should have a plan in place to deal with that if it happens. So we should self-insure for the amount of the deductible, or we should pay additional in order to reduce the amount of that deductible, depending on which makes sense to your corporation. That's one. Directors and officers liability insurance, something that I absolutely recommend, though it's not specified, is a peril in the regulations, and you'll find that in most policies anyways.
Absolutely. Okay, I think that's it. We can probably move on to the next section. I'm sure we'll have a lot more questions.
Excellent. So, at this point, really, then what we're going to do is kind of take a bit of a deeper dive into insurance coverages that are available to condominium corporations, those that, essentially are required, again, based on the perils that are described in the Condominium Act. So if we go to the next slide, before we kind of get into the specific coverages, I think in many instances, and this is certainly, a common theme that I've seen in talking with, various board members, insurance it's an interesting, it's an interesting product, right? So it's a completely intangible product that a lot of people really hope to never have to use. But, really all it takes is, one significant incident to occur. And, if somebody doesn't have, or, if a condominium corporation doesn't have the appropriate coverage or coverages in place to address that, specific event, then that could, severely jeopardize the finances of the condominium corporation. To one of David's points just a moment ago, deductibles, or what are also referred to as self-insured retention, those are certainly something to take into consideration when a condominium corporation and the board of directors are, I guess, kind of considering potential different coverages to, procure on behalf of the condo corp. And, you kind of want to be careful in that too, because, to David's point, you certainly want to make sure that the condominium corporation has, the finances to be able to cover that deductible, should something, occur, should an event occur. And, I think one of the biggest things too with insurance, because of the fact that, a lot of people view it as sort of something that, is maybe, unnecessary at times. Although, certainly there are disagreements with the phrasing of that. But really being careful to not make short-term decisions, financially, that could lead to even, more severe long-term financial, or have a much more severe long-term financial impact to a condominium corporation. So with that, kind of going to the next slide, a lot of the available coverages that are, commonly carried by condominium corporations again, like we talked about, the property insurance. Again, this is what's considered a first party coverage. So this is going to cover, buildings, the contents of buildings, could potentially apply to property of others, depending on the type of event that occurs, how that event occurs, where specifically within the building it occurs. And again, the various types or common types of events that occur when the property insurance coverage is triggered are, such as a fire, water loss, if there's some kind of theft from the property, hailstorms, windstorms, things along those lines. The general liability coverage, or GL for short, this is again a third party liability coverage. So this is going to step in and provide insurance coverage to the condominium corporation in the event of any potential liability to a third party. So again, and it's even on here on this slide, far and away the most common type of third party liability incident that we see is, a standard slip and fall or trip and fall type incident. And again, with it being winter, that's definitely, I think this is very timely conversation. Certainly want to be taking into consideration, snow and ice removal, making sure that, you have the appropriate services, being provided to the condominium corporation for the, proper and timely removal of snow and ice when, snow does occur. And then again, getting back to the, the risk transfer and risk mitigation, strategies, making sure that those vendors and contractors that the condominium corporation has engaged for those services, again, making sure that they're, properly insured, taking a look at their, limits of coverage, especially the GL coverage, and then making sure again that the condominium corporation is, absolutely listed as an additional insured on their policy of insurance, and that those policies of insurance are going to apply to the condominium corporation on a primary and non-contributory basis. Some other coverages, such as David was mentioning, the directors and officers liability coverage. This one is, definitely a very important coverage for a condominium corporation to have, because this is going to cover the board of directors for any potential legal action of, pertaining to allegations of, it could be a breach of fiduciary duty, some kind of, legal duty that is owed to somebody, and there's an allegation of a breach of that. Directors and officers liability coverage could pertain to, allegations of, improper voting at an annual general meeting. There are a variety of things that the D&O coverage, which is, directors and officers for short, that the D&O coverage, may apply to. So, from the perspective of the board of directors, especially, I would consider D&O coverage to be, equally as important as general liability coverage, just because there are a number of, potential perils or risks that the board of directors specifically could be facing, that likely are not going to be covered by a standard general liability insurance policy. Excess liability, also referred to as umbrella, kind of the excess and umbrella terms are sort of used interchangeably. But essentially what this, provides is, exactly that, is an excess layer of insurance coverage above and beyond that of the general liability policy, or depending on how the policy is written, potentially sitting on top of the D&O policy as well. So, essentially what this would do is, in the event of, an extremely catastrophic incident, if, for some reason the general liability policy limits are exhausted, then what an excess or umbrella policy would do is that coverage would then step in at the point that the underlying coverage, that the limits for the underlying coverage, I should say, have run out basically. So, again, I think in many cases, a lot of boards, or board members have a lot of, discussion around whether, an excess or an umbrella liability policy is absolutely necessary. But again, the one, I guess, primary word of caution that I would impart is, again, to really consider, the possibility of something happening, because again, keeping in mind that insurance is, like I said, it's that intangible product that we really don't think of until the time comes that we need to use it and need to rely on it. So again, just kind of taking the worst case scenario into consideration, having an excess or umbrella policy is certainly, something that I think is prudent for any condominium corporation to have in place. Some other available coverages are crime, which is also referred to as fidelity coverage. This could actually pertain to first or third party losses. So this is typically, going to cover criminal acts, forgery, fraud, things along those lines. Workers' compensation is another one that a condominium corporation, the board of directors may want to take into consideration. And that could be even if you don't have employees, right? So if a condominium corporation does have employees, then certainly, workers' compensation is going to be something that's required, right? Because you want to make sure that, that any direct employees of the corporation would be covered should something happen while they're on the job. But there could be some potential situations where, even volunteer activities, could qualify for workers' compensation coverage to those individuals as well. And then another one is what's referred to as cyber liability. Cyber is certainly, a coverage that, is becoming even, more and more prevalent these days, and more and more, important or critical for just about anybody to have, any business. A condominium corporation is certainly no exception. I can, at least, 5, maybe even 10 times on a daily basis, I'll receive, whether it's, via my work email, my personal email, a text, I'll receive some kind of phishing, email or text, where people are just, mostly it's, people that are, employing bots to try to get, someone to just click on that link or that attachment, so that they can gain access to, their device. That is, a very prevalent activity that, if somebody were to, accidentally or even, fall for it and click on the link, and inadvertently provide access to their device, to, some, fraudulent player out there, cyber liability would, step in and, help assist in the event of a data breach, or, any, breach of personal identifiable information, things along those lines. So, with respect to insurance coverages, some best practices for a condominium corporation to take into consideration, certainly the development of a preventative maintenance plan. This is definitely something that I highly recommend doing at least on an, or revisiting at least on an annual basis. In some instances, depending on what that, what the condominium corporation has in terms of, facilities, or, any number of factors, elevators, number of stairwells, things along those lines. Preventative maintenance plan may be something that the condominium corporation might even want to revisit on a biannual or possibly even a quarterly basis. Certainly, using available resources to help assess, safety and property risks. reserve studies are absolutely critical. I can't recall, Avery, when we were talking about this the other day, if you had indicated, that reserve studies are something that are compulsory on a frequent basis for condominium corporations. So certainly that's definitely something that a condominium corporation is going to need to do on a frequent basis. And certainly, implementing, capital improvement plans, because, just like, an individual, standalone home, any condominium corporation, no matter, how big or small, as time goes on, as buildings age, things are going to have to be repaired. Things are going to have to be replaced. That's just simply, a given. So making sure that, in conjunction with the reserve study, that the condominium corporation has, a realistic capital improvement plan in place, is certainly something that, that we highly recommend as well. David, I'm going to let you take the last piece here, because I know we had quite a bit of dialogue on this one, and I think your expertise in this area would certainly help with everybody who's on.
Sure. So the last one is a definition of a standard insurable unit, and that is something that is new with the changes in the Act and regulations as of 2020. And what it does is it defines what the base unit is that is going to be insured on your base insurance coverage. And it's actually registered at land titles, so it would show up for anybody who did a search of the condominium additional plan sheet, which is kind of like the corporate title for a condominium corporation. And they would be able to tell what the standard unit is that's going to be insured against. And just brought up to the regulations here. And that includes things like floor coverings, countertops, placement of pipes, anything in that manner. And so what that does is it provides certainty, so your insurer knows what it's insuring. The condominium knows what is insured. And if there's a loss, then there's no dispute as to what exactly is covered. And then it's the option of the corporation or the individual owners, as the case might be, to purchase additional insurance if they want for what are called improvements or betterments. So your standard insurable unit will generally be what the developer put in. So if your unit is basically unchanged since the development of the project or since the conversion of the project, if it's a converted building, then there's no reason for you to get improvements and betterments insurance. However, if you've done a lot of renovations, if you spruce your unit up, and if you want to protect yourself against any loss to that, to have that peace of mind that if a fire occurs, that not only will your contents be covered under your tenant's insurance, but the cost of the additions are covered, you can get improvements and betterments insurance, because the standard insurance from the condominium corporation will generally just be that standard insurable unit. Now, it is a good idea to do it, one, because it's required by the regulations. There are, of course, no condominium police, but it is a requirement. And so the board does run a risk if it doesn't register a standard insurable unit at land titles. And second, it provides certainty as you know what's insured. You're not going to pay more insurance for something that because they don't know exactly what the standard insurable unit is. And you're not going to run the risk that when you come time to claim insurance, the insurance company might take the position that, no, we don't actually think this unit or those units, the standard unit is less than what they might be claiming for. So it provides certainty in that regard. You don't have to hire people like me to fight about what is insured and what isn't, which saves cost. And then you can make a calculation as to whether you want to purchase improvement and betterments insurance. Now, your bylaws might require you to purchase improvements and betterments insurance. I've seen that before, and the Act states that along with all the perils listed, any perils that have to be insured against as per your bylaws are also required. So when you're talking about what is absolutely required to be insured against, you don't just look at the perils under the regulations in the act, you look at what your bylaws say, and maybe you have to insure against improvements and betterments. But if you don't, which most bylaws do not, then you can make an informed decision knowing what your standard insurable unit is.
Well, I think you basically answered the questions I had for you, David, on the SIUD that had come through. One of the additional questions from the chat here is just, is there a process to validate the value of SIUD?
So you wouldn't know, you wouldn't have a value. What it would be is just a description of what the basic unit is. As far as what are things like floor coverings, are they hardwood of what quality, countertop coverings, hardwood of what quality, appliances, that kind of thing. Now that's not going to define what your unit value is, because you could have 1-bedroom units to 3-bedroom units in the same complex that are going to have that exact same standard insured unit definition, but could be of huge range of value. So no, you just have to get an appraisal to find out what your value is. Now, and I guess further to that point, if there was a loss, and say there was a catastrophic loss and there's a fire, and the entire were insured against for your entire unit, they would just simply do an appraisal at that time to determine what would the value of that unit be if it was a standard insurable unit, assuming you don't have improvements and betterments insurance, so you wouldn't get credit for any renovations you did.
Awesome. I will just grab one more question from the chat here, jumping back to cyber policies. So whichever one of you guys wants to answer this one. For the cyber policies, are you seeing that the benefit of this coverage getting closer to the cost of this coverage? Also, do you recommend this coverage to all of your condo clients?
Yeah, that's an excellent question. So I guess to answer the last part of that first, yes, we do recommend cyber liability coverage to all of our condominium corporation clients. And really, again, the reason for that is just because of the prevalence of cyber crimes at this point in time. To go back to the first part of the question, cyber coverage, because of the fact that it is still relatively new. I think to the person's point who asked this question, cyber premiums for a few years kind of went crazy. And, unfortunately, there were a number of, global cyber incidents that really kind of drove those premium increases. Because I think when, the insurance, industry as a whole kind of, came up with the idea of, sort of launching this coverage, they didn't really have a true appreciation for just how widespread attempts at cyber crime were, or hacking attempts, and then all it took was for some high profile events on a global scale to take place. The Colonial Pipeline incident in the United States just a couple of years back, on a global scale, at least in North America. On the heels of that, within just a matter of months, we started to see cyber rates, kind of go through the roof. One thing I will say at this point in time is we are at least starting to see, the cyber premiums plateau. So where we used to see, rate increases around, anywhere between 30 to 50%. Year over year, and that's without even any kind of incident or claim payout. We're now seeing those rate increases kind of start to stabilize and fall within what we consider more reasonable ranges when we compare them to the standard rate increases that we see for other types of coverage. So I think that's certainly positive news. I'm hopeful that gone are the days of, again, like I said, those, 30 to 50% rate increases. frankly, I don't see how, insurers could, would be able to continue to justify those types of rate increases, especially for, an insured that doesn't have any loss history under that coverage. So I think there are a number of factors that are playing into that stabilization that we're starting to see at this point.
Awesome. David, do you have anything to add to that point? Okay.
No,
Well,
that's
okay. We can carry on to the last part, and then at the end we'll open it up. I know we'll have quite a few questions, and then we can ask more questions at the end.
Sure. So, so we wanted to take some additional time, here kind of toward the tail end of the conversation or presentation to kind of specifically address directors and officers liability coverage. Again, just simply because this really is a crucial coverage for, the board of directors of any condominium corporation to have in place from a risk, transfer perspective. So again, just sort of revisiting some of the claim types, again, this could apply to, allegations around breach of fiduciary duty, discrimination, wrongful, assessment. Where we typically see that is, anytime a special assessment is implemented. Those, and I'm sure I'm preaching to the choir here, those tend to be, or can be somewhat contentious at times. So that is, where we have seen, historically some claims arising, under or that have been, essentially reported under a client's directors and officers liability coverage. Another one that we have on here, architectural review decisions, things along those lines. And it's important to note too that from a D&O standpoint, claims can be monetary or non-monetary. So somebody could make a claim, an individual unit owner could, either, make a claim, file a lawsuit where they're looking for some kind of monetary compensation, or where they're simply looking for, the court's assistance basically to kind of step in and make a ruling on whether the board of directors needs to take some type of specific action in a situation. So with respect to the D&O liability coverage, who is covered? So first and foremost, the corporation, the condominium corporation, is of course going to be the first named insured. Individuals that would be insured then under that would of course be, the board of directors. And in most cases, even though the condominium corporation is of course the first named insured, the D&O coverage is, almost always going to, come into play when an allegation is brought forward against the board of directors, or even potentially, one specific, member of the board of directors. So we've got, a list of executive individuals there. But again, pretty much, all encompassing, either, current or past, board members or even future board members. On the same token, potentially, past, present, or future employees of the condominium corporation or volunteers. Certainly it could, in some instances, potentially extend to, the lawful spouse of an insured individual. And then typically the property manager is, going to be included on that D&O policy as an additional insured. So, some of the common claims, that are filed, if you will, or reported under the D&O coverage. Again, breach of fiduciary duty. I think probably the most common is the second point here. Failure to adhere to or enforce the bylaws, or even, kind of expanding that a little bit further, failure to enforce them consistently. That's something that we see, on a pretty frequent basis. If somebody is bringing forth an allegation that the board of directors is selectively enforcing the bylaws. So that's certainly something where, again, the DNO coverage would come into play for defense purposes, if a lawsuit is filed, or, even potentially for, indemnity purposes in the event that, something, a lawsuit is filed and, whether there's resolution via, some kind of settlement, or, worst case scenario, I think always the worst case scenario in litigation, if there's no, a resolution that's achieved, prior to the matter going, essentially going the full distance and going through trial, then if it does go to trial and there's an adverse verdict against the board of directors and or the condominium corporation, then again, dependent on the facts of the situation, and depending on, the ultimate ruling, the DNO policy could potentially, step in and of course, in addition to paying those defense costs, then step in and, potentially pay all or at least, perhaps some of any, adverse award that's rendered. As we talked about, a few slides back, discrimination. And this could be, this is obviously a very broad term, right? So this could be, discrimination on any number of levels. It could be age discrimination, discrimination based on sex, discrimination based on, disability. So again, if somebody is making allegations of discrimination, then the DNO policy is the coverage that would step in and afford assistance in that regard. Support animals. Certainly we've seen a number of complaints, namely human rights, complaints brought against condominium corporations around support animals. And then again, like we talked about a little bit earlier as well, challenges to the election process. That's certainly something that we've seen as well. Architectural review decisions, that's certainly something that could come into play. And again, this is by no means an all exhaustive list, right? We're just trying to identify what we, have seen in the past as some of the more common types of allegations that have been brought against a condominium corporation and or the board of directors. So, it's important to kind of point out at this point that, when we kind of go back to the idea of, insurance, just in general, and whether or not to carry insurance, certain types of insurance coverage, it's really important to point out here that all of those items that we just listed as examples of, potential claims that could be brought forward based on allegations against the board and or the condominium corporation, in the absence of a DNO policy, the condominium corporation would essentially be, self-insured for these types of things. And, I don't think very many condominium corporations or board of directors would want to find themselves in a position where they don't have any type of risk transfer mechanism in place, because these types of claims definitely do happen with a pretty fair amount of frequency. And I would say, over time, that the frequency has definitely started to increase, year over year. And I don't know if that's just a matter of, people becoming, more savvy, around, the claims process or around litigation in general, or if it's just, an unfortunate, byproduct of, just the litigious nature of, of where we're at in terms of society. But we definitely do see, more and more, claims and complaints and lawsuits being filed against the board of directors and condominium corporation clients, where the D&O coverage is very critical in terms of stepping in to help provide, coverage for the defense of the named individuals. And then in some instances, certainly stepping in to help with indemnification as well, in terms of settlement. One of the key components, if we could actually go back to that last slide there, the previous slide, and I'll just, very briefly talk about this. It's not something we necessarily have to go into a tremendous amount of detail, but one of the interesting components about the D&O policy is this is typically a claims-made policy or coverage as opposed to occurrence-based. The difference being that, when a claim is reported, that's when the D&O policy or coverage would kick in. Whereas, like, say, by contrast, a slip and fall, that's going to be an occurrence based, where you could, the condominium corporation could potentially have had their GL policy placed with a different insurer when the incident actually occurred. And if that's the case, then they would certainly be able to go back to that prior insurer and say, hey, we just received a statement of claim from somebody who's alleging a slip and fall that occurred a year ago. Well, we had our GL policy with you all at that time, so we're going to need to report a claim under our prior policy, and that's very commonplace. Whereas the D&O policy, that's not how it works. It's essentially every insurer is insuring a condominium corporation with the understanding that they could potentially be insuring the condominium corporation for something, for allegations that actually predate that policy. But nonetheless, it's all determined based on when that claim is first presented. So we can go to the next slide. So, again, some important takeaways here. I think the first one by far, and David made this point, very well, is really know your bylaws. That's critical, because to David's point, the bylaws of the condominium corporation could actually, place a requirement on the condominium corporation or the board of directors that may not actually exist from a statutory standpoint. Essentially the act basically just kind of outlines what the bylaws, have to cover at a minimum, but that doesn't mean that a condominium corporation couldn't, enact, bylaws that go above and beyond that. So again, it's very critical to, understand and to know your bylaws. Equally important, understanding your duties as a board member. You have a number of duties to the condominium corporation and, the unit owners who make up the corporation. So it's important to understand what those duties are. Another one is to make sure that, you're operating the condominium corporation like a business. I think far too often and this is certainly understandable, because, the condominium corporation is where everyone lives. And, sometimes it can, issues or complaints, can become very personal. And that can be very challenging for board members. And that's certainly something that we understand and appreciate. Nonetheless, as much as possible, try to, kind of take the personal element out of it. And again, operate it like a business, because ultimately, at the end of the day, a court of law is, as David, indicated, court of law is going to go based on, the rule of law, right? So first and foremost is, are any statutory requirements that are placed on the board or the condominium corporation. Beyond that, what do the bylaws say? Again, personal emotions and subjectivity is not going to come into play. It's all going to be very objective, objectively based. So again, it's going to come down to, statutory requirements and the bylaws. This fourth point is, from an insurance perspective, this is absolutely critical, is immediately notifying the insurer of a claim or potential claim at, as close as possible to when the incident occurs, or as close as possible to the first time that the condominium corporation is made aware of the incident. far too often we see incidents occurring, or the condominium corporation being notified of a specific incident, but then direction is not provided to report that immediately to the insurer. The adversity here is that every policy of insurance is written such that it has very specific language around the timely reporting of a claim. And if too much time passes, then an insurer can essentially, deny coverage outright, because what they'll say is that their ability to properly investigate the incident has been prejudiced based on the amount of time that has passed. So again, either when the incident occurs or as close as possible, whether it's when it occurs or when the condominium corporation first becomes aware of the incident. Again, these are going to be that's going to be very critical for the condominium corporation to report those. And then certainly keeping well documented records, decisions, board meeting minutes. Obviously that's very critical as well. And then certainly reviewing insurance applications very closely too, because the applications are certainly going to include a variety of questions that the board of directors may want to go back to the broker and question them as to why the insurer is looking for certain information. In some instances, insurers have a laundry list of questions that sometimes they might, if an insured goes back, or a potential insured goes back to the broker and says, well, what are these questions all about? It very well may be possible that the insurer comes back and says that those may not be required questions to answer. In some instances, insurers are just trying to look for as much information as possible. So from an underwriting perspective, the more information that's provided, the more they may try to argue that they have a basis for rating that insured at a higher percentage or a higher rate from a premium standpoint. So again, reviewing those applications closely and even asking, engaging the broker anytime certain questions are encountered that may not seem applicable. It's absolutely appropriate to go back to the broker and ask why those questions are being included, whether it's a new policy that's being procured, or even renewal of an existing policy that's coming up for expiration.
Awesome, thanks, Todd. I know we're just about at our hour mark, but I think we can push it just since we have you, David, and Todd on the call. If anyone needs to drop off, we are recording and we will send this out, so no worries. You can always kind of grab the recording and listen to the end of it as well. But maybe, David, I'll cue it over to you, because I know there's lots of great questions in the chat here. So maybe if you want to just pick a few even to answer that you think are kind of most relevant, we can do a couple questions there. And Todd, you can jump in if you have anything to add to some of his chosen.
Okay, yeah, sure. I'll just go through the questions in order. Some of them probably aren't appropriate for me to answer, but I'll answer what I can. So the first one says, is there a rule of thumb to what defines adequate coverage? The reference in the Act is what is appropriate and generally understood in the insurance industry. And the adequate refers to the perils insured. So the Act lists a bunch of perils: water loss, fire, storm, flood, those sorts of things that you have to insure against. The adequate coverage is what is reasonably understood in the insurance industry. So what is adequate in that respect depends on what your broker says is adequate, and whether he can back it up is, well, if that ever got decided by a court, then we could have some authority on that. It is subject to a reasonable deductible, and deductibles have been going up and up and up recently. There's one case from 2015 that said, absent any evidence to the contrary, a $35,000 deductible is not reasonable. And I said that in what's called obiter, and I don't agree with that. But ultimately, if that was ever challenged, you'd have to bring in some kind of evidence from the insurance industry to say, here's why a deductible of 35, 50, 75, $100,000 isn't reasonable in these circumstances, but we don't really have good authority on that. So what is adequate is basically what your broker thinks is adequate at this stage. The next one is a liability risk for a board member regarding defamatory statements and non-compliance. So certainly, yes, there definitely is risk there. If a board member is not complying with the bylaws, then you can issue sanctions against them or bring an application to court against them for a order that they comply with the bylaws, or depending on the nature of the violation, in order that they sell their unit if it's extreme enough. And in this case, you know, if it's really bad, you might consider calling an SGM, so special general meeting, to hold another election of the board to try to get them removed from the board. Because if they're interfering with the business of the board and casting the board in a very bad light to the other owners, then you certainly have a risk there that so some kind of action might be brought against the board if they're purporting to act in the capacity of the board. But certainly board members are not exempt from the bylaws. If they're violating the bylaws, you should take the same action you would against any other owner or resident. Question about insurance deductibles for water coverages. Yeah, I'm seeing excess of $75,000. And does the existence of poly B water lines impact? I'm not sure if Todd might know that. I have encountered the poly B before. The question asker probably knows it better than I do, but it apparently was a material used some time ago that at the time was thought to be compliant and was fine, but it does not age well, and it has been associated with some water loss and water damage incidents. So I would expect that if the insurer knew you had poly B in your units, that they may increase coverage or increase the deductible, or increase your premiums, I should say. I know that in the past I provided opinions that for bare land units, you should be advising owners if there is poly B in their units, and you should advise them to talk to the insurer about it or to have it removed. And of course, if it's within common property and it's a apartment style condominium complex or something of that nature, you may want to have a discussion as to what it costs to replace it and what that cost is versus the risk of having multiple losses and increased premiums. Does the property manager team or an individual require liability coverage in addition to DOA? A property manager would generally have its own coverage in most any property management contract. I'm sure the ones with First Service as well have a provision about indemnification. So if the property manager is brought into an action just by nature of them being the property manager, and I see that all the time, property manager is agent for the corporation. So what they do is in effect what the corporation does. But a lot of times they're named simply because they were involved, even if there's no real reason to name them. It should just be the corporation. But generally an indemnity provision will be in the property management contract, and they can rely on that and say, you have to basically carry our defense for us. Now this next one with respect to slip and fall and proper timely removal of snow and ice, it's probably a better question for a personal injury lawyer who have a lot of experience in that area. But generally my opinion would be, and maybe it's just an opinion, is if you've hired a snow clearing contractor and they come, you know, when it snows on a regular basis and they haven't shown themselves to be insufficient in that regard, then you've probably covered yourself. And I mean, I think the courts would take a very sympathetic view. If there's a massive snowfall, you know, you can't clear every sidewalk right away. There's going to be some time for them to do their route and hit up everything. And if a slip and fall occurs in that time, I mean, everything's fact specific, but you probably have a very good argument that you did your due diligence and we're not negligent in allowing that to happen. That's John's question. I'll leave that for Todd or somebody else to address, as well as Torval. Hi, Torval. Something for FSR to address as well.
Yeah, and that we don't immediately get to, and I know there's quite a few in there, so we probably won't get to them all. We will be, we'll make sure that we answer these in writing and send them out too. So maybe even if you just want to kind of pick one more to finish us off, then we can let everyone get back to their evenings and probably go have dinner.
Okay, so there was one in here, I guess, about an owner suing a board or corporation. I guess that's really up my alley. So yes, it is sort of like suing yourself, except for if the legal costs are incurred, it would be split X number of ways, depending on how many units you have and what your unit factors are. But there's plenty of reasons why an owner might sue a board or corporation if they're failing to properly enforce the bylaws, if there's nuisance, if they've charged their unit back for deductible and they think they don't have the grounds to do it. I have countless files or owners who sued condominium corporations, and there is precedent. I had a recent file where the courts have ruled that the unit owner who brought the claim and who was successful against the corporation is exempt from the passing on of any legal fees through their condominium fees. And I had one very recently where the court ruled the corporation was trying to enforce inappropriate mold remediation within the unit. And because they did, and because it became a massive litigation file, the owner was exempt from any charging of their legal fees. So they had to special assess all the other owners, but not the owner who brought the lawsuit for the legal fees incurred.
That's really interesting. I had not heard of that before. So I think that's definitely an interesting fact for probably most of the board members on this call. Todd, any final comments on any of that, or David, anything else you want to add?
No, not that I can think of. Just, certainly thank you everybody for joining us this evening.
Yeah, thank you everyone so much. We so appreciate you taking the time. Like I said, we will be answering the questions that we didn't get to because there are a lot of them. We'll be sending those out in about a week or so. Also, we really value your feedback. It helps us develop future webinars and content specific to what you're looking to see. So please provide us your feedback. I believe there's a survey that you'll get as soon as you pop off. If you liked our webinar, also you can scan the QR code below and leave us a Google review. Thank you so much, everyone, and have a great evening.